Folks, today I want to talk about how we can make our portfolio healthier with top undervalued drug stocks. Now, unless you've been living under a rock for the last several months, you know that the search for the COVID-19 vaccine has been the biggest hurdle in history of modern medicine. Well, I don't want to panic you. Can you imagine the world without a cure? Can you imagine the impact it'll have on the stock market in the long term? The GDP is already expected to be down double digits from the positive 2% growth we've come to expect. But there's a silver lining to all of this. No need to worry. The world is on a hunt to discover a vaccine, and billions of dollars are pouring into drug companies that are promising us the cure or a vaccine. What's great about drug stocks right now is that the entire sector is being lifted by an influx of capital coming in from the Fed as well as institutional investors, in hopes that once the vaccine is released, the world economy will be restored to its balance once again. While there's no guarantee this will happen, the current stock market environment is putting a premium on drug stocks, and investors are not shying away. Today, I want to introduce you to a few drug stocks that still remain undervalued, even by today's valuations or today's pricing levels. Now, these stocks have a low PE ratio and high dividend yield, and most importantly, they have the potential to move up as much as 50% over the next few quarters if the sector continues to see the same interest we've been seeing over the past few months. The first stock on my list is AbbVie, ticker symbol ABBV. The company has $170 billion, that's with a B, in market cap, and has a PE ratio of only 9. The growth prospects are strong with the recent acquisition of Allergan for $63 billion. Allergan is well known for its Botox and other beauty products. In turn, the deal will help AbbVie diversify its earnings and buys time before its arthritis drug, Humira, goes off patent in 2023. The 5-year earnings growth, 170%, give or take. 5-year dividend growth, 157+%. Earnings per share growth versus the previous quarter, 9.5% higher. How about earnings growth versus previous year quarter ago? 13% higher. Not bad, right? Now, we've seen 4 positive quarters of earnings surprises. The company has a strong dividend yield of almost 5%, which tells us it's got plenty of cash on hand. Now, with the added accumulation moving into drug stocks, and with AbbVie showing strong fundamental growth, I'm expecting more upside in the next few months. The short-term price target is $125 per share, which is above the current value by about 20%. The stock's got 10 strong buy recommendations, and I'm expecting more upside ahead in the next few quarters and possibly sooner. And the ticker symbol is ABBV. That's A, B as in boy, B as in boy, V as in Victor. All right. Now, the second stock on my short list is Sanofi Aventis. It's just easier to give you the ticker symbol. It's SNY. SNY. Sanofi Aventis is a global pharmaceutical company that contributes to enhance life by providing medicines, vaccines, and integrated health solutions adapted to local needs and means, primarily in Europe and the United States. The company offers vaccines in 5 areas: pediatric combination vaccines, influenza vaccines, adult and adolescent booster vaccines, meningitis vaccines, and travel and endemic vaccines. Boy, it looks like they've got it all covered. In late June, Sanofi partnered with another company, Translate Bio, TBIO. TBIO is the ticker symbol. The companies have worked together before and use a messenger RNA technology, much like Moderna and Pfizer, for their COVID-19 vaccine drug. In turn, this technology induces antibodies for a specific protein related to the novel coronavirus. Trials are expected to start in the 4th quarter, a little bit a while from now. The stock is now priced at only 15 PE ratio. Earnings per growth versus previous quarter, 21.5%. Earnings per growth versus previous year quarter, same quarter, 11% growth. Stock has shown earnings surprises in the last 4 quarters. Based on fundamentals, I believe the stock price can rally as high as $100 per share over the next 3 quarters if the research works out the way the company is expecting things to shake out. Overall, keep your eye on both SNY and ABBV for more upside from these 2 drug stocks. Remember, something very, very important. Consumer spending is drying up right now, while money is coming in from drug stocks, coming in from Fed and from private institutional capital. This makes drug stocks a lot less dependent on the overall economy, and gives us a good chance for more upside, even when the economy begins slowing down, which is the scenario right now on Wall Street. Hope that helps. Folks, record volatility has some investors acting like gamblers with their retirement fund, chasing lost money, panicking, and buying. It's really sad. I mean, really, really sad. While casinos can be fun, you really should leave the gambling mentality at the door when you're trading. If you can keep your head on your shoulders and work a solid plan like the one Jevson and Ari is about to reveal, history shows that these markets are exactly where you can make a lot of money right now. In fact, this phenomena has already offered an opportunity to see gains like $12,870, $13,509, and $20,380. Folks, don't gamble with your nest egg. Click on the link below to double it with this strategy. Do it now.